Well, guess what my topic is today? It's one that I've heard a lot about from the people that have been watching our vlog. Corporate earnings impact the markets. Now, the reason I'm bringing that up, in the last vlog I talked about corporate earnings, and I'm going to talk about it again because I think it's going to be a huge theme through the rest of this year. This past Friday, the Dow Jones Industrial Average dropped 205 points because of concerns over corporate earnings starting to slow down. It's going to continue to be a theme over the next 60 to 90 days as we go into 2013. There's real concern across the board. Let me give you another case in point, like Starbucks, for example, opened up new operations in India this past week. Everybody's all excited about it, but at the same time they're really concerned that at the Starbucks locations across the globe that their corporate earnings might slow down. So people are watching closely all the global companies out there, and I use Starbucks as an example to see how people are spending their money. Now, there's some forecasting that retail sales could be up this year, but if corporate earnings continue to be down, that could be a problem. People get less of those Christmas bonuses, and in addition to that, they get concerned, depending on what's going to take place from the election on, about the fiscal cliff and what Congress is going to do about tax rates. And in addition to that, as we approach the holiday season, keep in mind, just because holiday sales are up doesn't mean that those retail chains are actually making money. They may be slashing prices so much that they really don't have much profit in there. So I think it's a very interesting time over the next 60 days, and this past Friday just gave an indication that, hey, maybe we're not going to see the kind of revenue streams that we've seen for most of this year. So keep that in mind, and in addition to that, we're having that conversation with our clients right now in looking at their portfolios. From your standpoint, if you're someone that's not a client and not having those conversations with a financial advisor, then we need to talk. As our clients, as I always encourage you and appreciate the emails and comments that you give me, this will be a focus of ours for the remainder of this year and the first part of next year. Thanks for listening, and appreciate you tuning in.